NS Kannan joins us now, Managing Director and CEO with the ICICI Prudential Life Insurance. Let's connect with him to understand that how things have progressed for the quarter gone by. Now, you've registered a strong growth this quarter. Your NBP is up 18%, your VNP is up 36%. What would be the levers to ensure sustainability?
You asked about this VNB development. While you have pointed out correctly that the VNB has grown at 36% year on year for the fourth quarter, what we are particularly happy is what we delivered on what we articulated 4 years back. You will all remember that 4 years back, we said that we want to double our financial year 19 VNB in 4 years' time. And I'm happy to say that for the financial year 2023, we have actually more than doubled our VNB. So that has been the key highlight of our VNB performance. And if you look at the year as a whole, the VNB has grown at 28%, much ahead of the estimates. So that has been the highlight of our performance. You talked about what is the outlook given this. I believe that underlying the delivery of VNB, there has been a lot of work done on diversification of our platform. By platform, what I mean is that be it the product suite or be it the channel diversification, we are much more granular today compared to what we were 4 or 5 years back, with adequate representation in the mix of linked products, non-linked products, protection products, annuity, and so on. And similarly, on the channel, there is a well-diversified channel mix we have today. So given all this, I believe that we are well positioned to further grow our VNB, given the insurance potential and the regulatory developments in the country. So that is how I'll summarize the results for this period.
Right. Your premium growth over the last few years, especially from the banca channel, has been a bit of a concern for shareholders. Do you think this is likely to change going forward?
Yeah, the way we looked at is that we are one of the well-diversified channel companies in this space. So what we have for a bank-promoted company, possibly we are one of the most well-diversified within the banca itself across all the companies if you look at. So if you look at our banca constitutes about 30% of our business, with the agency constituting about 26% of our business. So growth concern you talked about, the way I look at it is that to split between ICICI Bank and non-ICICI Bank. As you all know, ICICI Bank has been focusing on the banking products, not so much on the third-party products. Given that obviously the consequences are that the ICICI Bank growth rate has come down. It is in the public domain. We have seen a 38% decline, for example, in financial year 2023, year on year, in ICICI Bank channel. The other channels, if you look at other than ICICI Bank, we have actually put out a very strong growth rate of 28%. Even if you look at on a 4-year time period, non-ICICI Bank channel growth has been at 18% CAGR. So there should not be any concern whatsoever regarding the growth. And specifically, if you look at the Q4 of our performance, there has been a very solid growth in terms of our APE, and we have actually grown with ICICI Bank together. We have actually grown the APE at 27% year on year. So it's a solid platform, and the growth has come back very strongly. And particularly, I will point out that in the fourth quarter, the retail protection, which has been a bit across the industry during this pandemic period because of various factors, especially supply side factors, that has come back on track. We have actually seen a 28% year-on-year growth in retail protection alone. And as you know, it's a great product from a customer perspective in terms of fulfilling their protection requirements. And from our perspective, it's a high margin product. And given that the base is low, that is also going to give us a huge growth in the VNB going forward. So I think there should not be any concern whatsoever on the growth of the company, not only on VNB, but also on the top line.
Fair enough. What about any major changes in the product mix that you've witnessed in this quarter? Anything specific, any new products that you would like to introduce in FY24, especially in light of the recent changes in the budget on the high premium policies?
See, the way we look at this high premium tax, etc., is quite different from probably some of the other players we look at in the industry. We do believe that we should have a product range to meet the needs of the customers. That is our primary plank, not on arbitrage or anything like that. There could be some arbitrages in the short term. There could be some policy things in the short term, which we should be taking advantage of in terms of having a base to take advantage of such situations. But beyond that, our focus is on meeting the needs of the customers. So we had put out some time back in the public domain that this high ticket policies just constituted 6% of our APE. That's one of the lowest in the industry. So to that extent, we don't have any impact at all. And we have had similar situations in the past of tax changes for ULIP. And when we looked at our product mix post and pre that tax change, we didn't have any significant difference. So that goes to say that these tax matters are left to the government. I'm sure government is taking an appropriate decision looking at all the factors, but we should be ready to play within that. That's the way we feel. What is the best play to play within that? Have a full product suite, have a well-diversified channel mix, and take advantage of the great insurance opportunity in the country. So to that extent, I do believe that these are all some of the passing sort of clouds, I would say, and we will be back on track. And we are already back on track. So we are not dependent on any tax regime change or any specific incentives being given for our products. And that is the way we have run our business. That's the way we will continue to run our business. And the results you have seen across these last 4 years is really a testimony to the fact that a well-diversified channel and well-diversified product mix, how we can do wonders to the VNB development for a company.
Right. And where would all of this rather leave your margins, say 2 to 3 years from now? And how is it that your margins would evolve, you think?
Yeah, at 32% margin, VNB margin today, we are the best in class as of today. That's what I want to first lay out. And we are not single-mindedly focused on the margin. Margin to us is a derivative. We will focus on VNB development. And margin, whatever comes out of it in terms of VNB to APE, that becomes the margin. Having said that, I do believe that the margins can potentially grow in the medium term. Why I say that is because the protection, as we talked about, it's only about 17% of our business today because of various factors which I mentioned earlier. That 17% has a potential to grow to probably a quarter of our business over the medium term because there is a huge potential. And we are coming with a lower base because of the pandemic and the related supply side issues. When these things get sorted out as we move along, the protection can become a higher proportion of our product mix. When it becomes a higher proportion of our product mix, as I said earlier, it's a higher margin business, so it can push the margin up. However, having said that, we would be focused on growth, and growth has come back very strongly. If you look at the financials for 2023, and in the short term, the VNB development could be driven more by the top line, but in the medium term, I will not rule out any margin expansion, even from this highest level of margins in the industry.
Your distribution mix currently looks more balanced than what it did 4 years back. Which are your most accretive channels from a product and margin perspective, and would you look to change this at all?
Thank you for saying that. Yes, it is more balanced and more diversified, and thank you for recognizing that. So if we look at how the distribution can grow from here on, I think there is a huge opportunity in growth in terms of tying up with more banks as we go along. As you know, IRDA has recently opened up the corporate agents architecture. Thereby, they can add more insurance companies. And we, being a company already working with 39 banks, are in an advantageous position to get more and more banks into our fold. So that is one area where there could be a growth. Agency is already 26% of our business, and it's a granular channel, and the agents are looking for business, and we are recruiting, and we have expanded the agency force during the last year, and that will start yielding higher benefits as we move along. So I have a feeling that even in the medium term, we will continue to have a balanced mix, growing both agency as well as banker, and to some extent the direct business as well. These are some of the channels which will lead the growth when it comes to APE. You talked about the margins of the channels. The way we look at it is that margin is more of product specific than a channel specific. Depending on what product mix a channel picks up, the resultant margin happens. So we will focus on the products, and we will focus on keeping the products available across the requirements of the customers. And depending on the customer profile of the channels, whatever they pick up, that will give us a net margin. So that is the way we look at the channel product margin dynamics.
What would be your immediate targets for FY24 be? Growth in terms of VNB and margins?
So if I look at it from a potential perspective, I do believe that the savings line of our business can grow at the nominal GDP growth rate. So because we have seen a lot of market volatility last year, hopefully as we go along, things will stabilize. That could give us a little bit of growth in the ULIP segment. Similarly, other segments also can potentially grow, participating and non-participating. Given all this, I think the savings line of business can grow in line with the nominal GDP growth rate. If you look at protection, The group protection could be a bit stable because we have seen a tremendous growth in the last year, again driven by the pandemic. However, the retail protection is having a lower base. When I look at our own performance in the last 6-7 months, sequentially we have been improving the retail protection and we are sorting out all the supply side issues. So much of those issues are behind us. So I have a feeling that the retail protection will grow at a rate which is higher than the overall top line growth rate, which could be beneficial to the margins as well. So the growth outlook is, as I said, savings in line with the nominal GDP growth rate, protection a little bit higher than that. Margin outlook is stable as of now. That is what I can say. But we're not really articulated a specific target for financial year 2024. But this is the potential within which we will operate.
And soon you're going to be retiring as the new managing director and CEO is going to come through. Is there enough depth in the ICICI Pru leadership to continue the journey that you began?
Yeah, so when you look at the ICICI group, there is never a dearth of talent or any question about leadership depth at all. So even now we can see that as I retire, we have been one of the companies which have planned very carefully the succession, and Anup is going to be here. So if you ask me, what do I feel about the company? Very strong leadership depth, and the legacy will be carried on. So that I have no doubt about. You talked about Anup. Anup has been my valued colleague in ICICI Group and also my classmate in the business school. So I've known him for 3 decades. And more importantly, from a company point of view, he has been a non-executive director of the company for over 4 years. So I do expect a strategic continuity. And I have said openly in my analyst call to say that my team and I will ensure a very smooth transition. So there should not be any problem whatsoever. There should not be any concerns regarding the strategic continuity or a leadership depth of the company. And I can say that every time a new CEO comes, of course, he or she brings his or her own perspective. So that should be expected because each one comes with his or her own perspectives to the business and the agenda. Having said that, given that he has been on the board for 4.5 years, part of the strategy formulation, I see a strategic continuity. At the same time, company being taken to newer levels of value delivery to the shareholders. That's the way I look at this leadership transition.
Well, it's a really appreciate your time. So glad you could join us.